Hi guys, welcome to this week's episode. Once again, my name is Pat, the manager at the Reef Trading Academy. Today we are going to discuss and learn about the time frames and top-down analysis. Okay, and please remember that at the Reef Trading Academy, we offer free signals for the Reef's synthetic indices. And if you are interested, just subscribe to our Telegram channel via the link on the description. We also offer mentorship program for those who are passionate and willing to learn how to trade synthetic indices most profitable on their own. And if you are interested on the service, email us at the email provided on the description as well. Here is how our mentorship program looks like. Let's see. All right, and please, if you would like to get notification whenever we upload a video, make sure you subscribe to the channel and click on that notification button. And may you please like this video and share to whoever you think would like to see this information. Okay. Right. So here is our mentorship program. And here is how it looks like. As we all know that the purpose for the Reef Trading Academy is to help people, rich or poor, which is why our mentorship program is this cheap, and we're still trying our best to make sure that everyone is satisfied with our pricing and ensuring that everyone gets the assistance they need. I know most people have been sending me messages asking if I can assist them with the capital. Unfortunately, we currently do not have such assistance, but I can assure you that soon enough we will have something similar to that, whereby we'll be helping those individuals who need assistance with capital. Okay, as you can see, our mentorship program is only $48, of which is far less than what our information is worth. I should not be charging anyone for this mentorship program, but because I know that most people, when getting things for free, they tend to relax, which is why people learn the most on a real account than on a demo. Okay, so if you did not pay anything, you tend to not paying too much attention, to it. All right. So very few people are willing to learn. Most, they just want to get saved. Some of our mentorship program benefits includes the following. Number one, you get signals from day trading strategy, which is this one here. And then number two, you get trading checklist for all three strategies and many more. Okay. All right. Now let's get down to business. Let me. Okay. So this thing is okay. Let me just fix this. Let's get back to business. Okay. So where is it now? Okay. Sorry about that, guys. Sorry about that. I'm trying to be as fast as I can, but then seems okay. All right. So here we are. So guys, with time frames, if you have been following me long enough, then nothing here will come to you as a surprise. We know that every Sunday we're having a weekly watch list where we discuss the previous week candlestick. Then we go down to previous daily candlestick, then go further down to previous 4-hourly candlestick, and go even further to previous hourly candlestick. Okay, so in this order, we are doing a top-down analysis from the top, which is our weekly time frame. Okay, from top all the way down to our daily time frame, all the way to our 4-hourly time frame, and also even furthermore to hourly time frame. All these time frames using the previous candlestick, previous chart. Okay, so when I speak about weekly time frame, I won't be speaking about the current candlestick here. I'll be speaking about this previous candlestick. This previous candlestick. That's what we check for. That's what we look for. Previous 4-hourly time frame. Previous 1-hourly time frame, not the current, the one that is still running. No. Okay. So doing this from week day 1, H4, H1, we are doing the top-down analysis. We went from analyzing weekly time frame, which is our top, and went all the way down to hourly time frame, which is down or which is low. That is why it is called top-down analysis. Okay. Price actions works best on bigger time frames and not on smaller time frames. If you get this correct, then all shall be well with you in this trading industry. So in whatever you do, whatever strategy that you'll be using, make sure that you try using the bigger time frame. Okay. I know that most people use a smaller time frame. I'm not saying that a smaller time frame such as M15 and M5 does not work, but then it is most preferable using the bigger time frames, especially in a synthetic indices market. Okay. And besides, there is no action price trader who were successfully focusing on only one time frame to analyze his charts, which is why top-down time frame is essentially in trading. I have already explained to you what top-down analysis is. If you want to trade 1 hour chart, you need to consider day chart first. This is a very important step to take as a price action trader. So whenever you want to trade the smaller time frame, make sure you consider the bigger time frame. Okay, that's what I'm basically saying there. So this helps you to avoid low probability trading setup. It allows you to remain focused on the higher probability price action signals. Okay. So through our top-down analysis, we always start with a bigger time frame, and we look for to gather the following information. What information are we looking for on a top-down analysis? Okay, let's say, for example, this one. Let me put on a, okay, what's this? Objects and shapes. This is a rectangle. This is a rectangle. Okay, this is our daily time frame. Okay, let's say we want to buy, So considering my daily time frame, you can see that, okay, what is happening there, it is actually in the middle, not at a support. So let us go down to H4. What is our H4 telling us? It is telling us otherwise. So it is not a good time to buy, rather sell than buy. Okay. Okay, so if you see, okay, on our H4, you can see that there's a lot that is happening there. It is actually in the middle. It is not at the support, not at the resistance. It is in the middle. So rather wait for it to touch this zone here. Okay. So we'll be looking for support. Here's our support, if you still remember. And resistance levels. Okay. So these areas are the major turning points of the market, which you need to respect and pay more attention to this points. Okay. So if you are looking at this one, you know that this is our resistance level. Now you cannot just buy there because it is at the, you cannot just sell there because it is at the resistance level. You need to consider that. And also you cannot buy unless it proves to be broken. The resistance level proves to be broken. You don't do anything there. You can only sell if it proves that now it is selling. Okay. So that's all it is there. If you can identify these points, the resistance level and the support level, then you will be minimizing your chances of losing money, of which is the key plan in trading, protecting our money. So in trading, what we normally do, we try by all means to make sure that our capital, our money is protected at all times. So by doing all this, considering the resistance level, the support level, and whatsoever, top-down analysis, we are trying by all means to make sure that our capital is protected. Because the aim here is to make money, not to give away money. Okay. So another thing that you need to, that we will be trying to gather is the structure of the market. You need to know the structure of the market. If you know, looking at this, okay, forget about other stuff, other time frame. Looking at this, what do you think is happening there? Is it what is this? An uptrend or a downtrend? Or is it a ranging market or a choppy market? I don't know what you are seeing, but what I'm looking at right now, seems more like a ranging market on H4 time frame. But if we go to daily time frame, yeah, more like the same. But if we go to our weekly time frame, what is happening there? This is actually shows an uptrend. This is actually showing an uptrend. Okay, so I was just trying to analyze to make sure that you understand what I was trying to say there by if you want to trade. So the structure of the market, the weekly analysis that we have every Sunday normally helps us identify if the market is trending up or down, ranging or choppy. You already know that we do not try and trade choppy market. We only trade trending market and ranging, not choppy. If the market is choppy, you stay out of it until further notice. Okay. Normally, by doing that, we'll be doing a top-down analysis. You see. So by doing our weekly analysis, we'll be doing a top-down analysis, because what I normally do is that if there is an opportunity for us to buy, let's say on crash 300, just like we had last week. Okay. So we've already identified that our weekly time frame or our previous week candle shows that there are more probabilities, there are more chances of the crash 300 to buy. Then that's where we are going to wait there. And then we go down to our daily. We wait for our daily time frame also to confirm. And then we go down to H4 also to confirm. Okay. So by doing that, you can see that we are doing a top-down analysis. And by now, we already know what a top-down analysis is. Always remember not to trade against the big dogs. You don't want that. So try, by all means, to follow them, not going against them. Otherwise, you're going to pay with your capital amount. And you don't want that. You don't want that. Okay. All right. All right. Now, everything I have mentioned up to so far, you already know some of them. And the question